Now, to many people, taking out a cheaper mortgage and repaying only the interest on it seemed like a good way, if not the only way, they could afford to buy a property. Now, though, the Financial Conduct Authority is warning that more than 1 million people simply don't have enough money to pay off their debt, with an average shortfall of £71,000. Lenders will now write to borrowers to warn them they need to work out a repayment plan. Our economics editor Faisal Islam reports.
For 8 years, Rob McGregor from Reading has been paying up to £900 a month off his mortgage, except he hasn't paid a penny off the loan. He's part of an army of fairly recent home buyers who stretched their firepower in Britain's housing bubble by taking out an interest-only mortgage. Today, the regulators stepped in to defuse early what it's called a ticking time bomb. But Rob feels trapped.
I don't see how in 18 years' time I've got no chance of paying off the capital amount based on my salary. If it grows, in line with inflation, I'm never going to have an opportunity to save enough to pay off the debt.
Half of all households with interest-only mortgages have insufficient plans in place to repay them. 10%, that's nearly 300,000, have no plans. It's effectively glorified renting. This organisation, the FSA, waved through the interest-only boom a decade ago, now disbanded and replaced, albeit in the same building, with the all-new FCA, which today told banks to write to consumers about planning to solve the problem, particularly those with no repayment plans.
And that's obviously a big concern. The 10% that will, as of today, could get to the end of their mortgage and simply have nothing to repay the original loan.
They're basically renting, aren't they? I mean, do they actually own the house that they...
Well, the bank owns the house and they're paying interest on it. They own it if, at the end of that period, they can repay the original capital. If they can't, then that's a difficult conversation with the bank.
There are around 3.6 million interest-only mortgages in Britain. 2.6 million are to households living in their own homes. Around 1 million interest-only mortgages are for buy-to-let landlords, but they are unregulated in law and not part of today's report. Incredibly, at the height of the boom for 3 months of 2008, over half of all new mortgages in Britain were interest-only. Today, the residential market has largely been pulled by banks after regulatory concerns about interest-only. How? Through what appeared on Britain's high streets at the height of the go-go years. Up popped small-scale mortgage brokers chasing bounties of thousands of pounds from the big banks to push mortgages out to the people of Britain. Interest-only was driven through this channel, interest-only without checking properly whether people had a vehicle to repay the debt at the end of the loan. The former regulator, the FSA, has fined and banned dozens of these small-scale foot soldiers of the credit boom. But what about the generals, the big boys at the banks? Could this be the biggest mis-selling scandal after payment protection insurance? Do you see any evidence of mis-selling here?
This is more about credit. It's about whether people really have put in place mechanisms to repay. Mis-selling usually comes about when there's some confusion about what the product is. I mean, an interest-only mortgage, it does what it says on the tin. You're only paying the interest. So I don't think people can really say, well, I didn't really understand what I was getting into.
But on the other hand, in the banks, they must have known they were selling stuff as a mortgage, which some of these guys would never have a vehicle to repay back.
Well, no, I don't think the banks, I hope the banks wouldn't have gone on the basis that it didn't matter. I think the expectation, frankly, was that house prices would carry on rising.
But they haven't, and borrowers accept some, but not all, of the blame.
Without better support, without associated products and constant contact from the mortgage lender to make sure that you're looking out for your future, I think it's a very dangerous situation to end up in.
So buyers should have been more wary, but why was this niche product allowed to become mass market in Britain's already flawed housing market?